Good morning. How to structure a deal for easier approvals. And getting approved for a mortgage isn't just about your credit score, and it's about how the deal is structured. In the Medallion Funds, we've seen strong borrowers get declined over the years, and also average borrowers get approved simply because the structure was right. So if you're buying a home, refinancing, or investing in rental property, or just expanding your portfolio here in Texas, here's how to structure your mortgage deal for easier approvals. You'll thank me later. Number one, start with the end in mind. So think about your debt to income strategy. So underwriters will focus heavily on your debt to income ratio for personal backed loans. And it's also important to look at the stability of income. And what that means is they're looking at the likelihood of you being able to repay them. So before submitting an application, avoid opening new credit cards or any credit accounts. Don't finance furniture or vehicles. Consider paying down your credit card balances and also evaluate whether co-borrower strengths could help your situation. And sometimes the solution isn't more income, it's just better positioning. So number two, choose the right loan program and not just the lowest rate. They're both important, but structure matter more than rates do. Different borrowers require different structures. So W-2 borrowers typically are for your conventional, your FHAs, your VAs. And self-employed borrowers are more common with bank statement or non-QM loan programs. Whereas real estate investors prefer DSCR loans. And business owners buying property are thinking SBA financing. And trying to force a traditional loan on a self-employed borrower is one of the fastest ways to create friction in underwriting. And at Medallion Funds, we match the borrower to the program and not the other way around. So number three, you can increase your down payment strategically. And higher down payments will reduce your overall loan to value, but they generally tend to improve your pricing as well. And sometimes just a little bit better in price is what it takes to make a deal work. But more down payments is a lower risk profile, and it'll increase your approval odds. Even moving from, say, 10% down to 15% down can change underwriting perception significantly. So for investors, increasing equities can strengthen DSCR ratios as well as debt yield metrics. So we need to structure your income correctly. And self-employed borrowers often underestimate how important income presentation is. And some of the key considerations there is that we can add back certain things like depreciation, amortization, but also looking at your business expenses and doing an analysis like in a P&L format. We have to look at personal versus business bank flow and any CPA prepared financials, but also importantly is your stability over the last 24 months. So if you're self-employed in Houston, Katy, or Fulshire, structuring your income documentation properly can be the difference between approval and decline. Manage your reserves is number five. Reserves show lenders that you can weather volatility. And that happens when you can put money aside. And stronger files typically will have, say, 6 to 12 months of reserves in liquid cash accounts. And what that is just additional liquidity for, say, investment properties or livings, life expenses. But it gives you a clean documentation trail. And liquidity equals confidence for an underwriter. And confidence, that's what gives you your approvals. Six, let's reduce your structural risks. So underwriters will look for a few common red flags. Your high debt to income ratio files, or thin credit with not a lot of credit, or if there have been recent job changes, or if there's large unexplained deposits, or if you had multiple recent inquiries on your credit report. Proactive structuring means addressing these before underwriting sees them. Seven, broker advantage. So structure beats rates. And banks have one box and mortgage brokers have many options. Who do you want in your corner is the real question. And through Medallion Funds, we structure loans through a network of lenders so that the deal fits underwriting guidelines instead of us trying to force it into their box. And in today's market, approval isn't about finding the cheapest rate. It's about building a file that makes sense. So here's some final thoughts for the day. And if you want easier loan approvals, and I think we all do, let's talk. Structure the deal first, and then we can shop the rate second. Now, whether you're a first-time home buyer, a doctor, an investor, or a self-employed business owner, strategic structuring can dramatically increase your approval odds. Now, if you're buying in Texas, let's structure it correctly from day one. My name's Bill Rapp. You can visit my website at billrapponline.com. Figure out how to get a hold of me. Love to talk to you more about your situation. Take care.